We welcome TaskaBella's representatives and we thank you for the opportunity to manage your handbag pilot advertising campaign. The campaign, facilitated by Rocket Fuel over the last 4 months, was hugely successful and we collected detailed, valuable data, the results and insights from which we will share with you at this meeting. In the last 4 months, we served 14.5 million impressions to 590,000 unique users. From these unique users, approximately 15,000 bought your new handbag, which is a 2.6% conversion rate. This rate was an increase of over 40% from the 1.8% conversion if we had not run this campaign. As a result, your revenues boosted from just over $1 million to $1.5 million. Your incremental profit, after accounting for all costs, achieved a healthy 12% lift over status quo. So congratulations on this great start. In this section, we will talk about how we arrived at the numbers we just discussed. As mentioned, the 15,000 units net of revenue of $1.5 million and a cost of $900,000, which leaves you with a margin of $600,000. Once you take away the cost of this advertising campaign at an average CPM of $9, your net margin is $470,000. We know that some of these handbags would have sold based on your strong brand, social media presence, and word of mouth. The control group that was randomly selected had a conversion rate of 1.8%. The campaign added 0.8% to the conversion, which gave us an incremental 4,300 units. This netted over $43,000 in incremental profits, which is a campaign return on investment of 33%. Next, we looked at the opportunity cost by considering the control group of 4% of the unique users. Our assumption is based on the control group getting exposed to real ads and converting at 2.6% instead of 1.8% status quo. Of the 23,000 unique control group individuals, 420 converted and an additional 181 could have converted, which is an opportunity cost of $7,000, a minor concession. For every 1% reduction to the size of the control group, opportunity costs reduced by $1,800. Moving on to some of the insights we obtained. We segmented the data based on impressions count per unique user, as you can see on the bottom of the chart. Now, when we plot the average control group conversion of 1.8%, we start to see something interesting. The conversion rate of exposed group shows that we need a minimum of 50 impressions per user to make the next campaign more beneficial. These 50 to 100 impressions per user is where we start to see positive and sustained rise in conversion rates. Overall, the range of 50 to 800 impressions per user seems to be the sweet spot, after which we saw diminishing returns. In the future campaigns, we need to focus on market segments where we can serve at least 50 impressions to everyone. Once we looked at more detail and plotted conversion on a day-to-day basis, we found that Monday to Wednesdays were the most beneficial days. The campaign was most effective on Tuesdays, while Thursdays were the worst performing days, compared to the average conversion of 2.6%. It is possible to infer that weekend browsing habits may lead to these high conversion rates at the start of the week, but that would make Monday the best converting day, which it is not. This graph shows you the hourly control group and exposed group conversion rates and the incremental conversion due to this campaign. Looking at the data on a per hour basis, the highest conversions happen right after lunch and dinner times for most. An interesting thing to note is that we were able to uplift the conversion rate during the lull period that goes from early morning to noon. Here we can see the incremental conversion rates per hour compared day to day. Monday, Tuesday, and Wednesday gained the most, while Thursday was inconsequential. In conclusion, The campaign was effective and created additional sales that contributed to TaskaBella's bottom line. Armed with the new information from the campaign, we will be able to target our future campaigns more effectively through the right targeting and positioning methods. Thank you.